A very warm welcome, everyone, and thank you so much for taking the time to hop on this Monday morning as we kick off the very first installment of the Nedgroup Investments Annual Treasurers Conference, which is officially in its 10th year as of this year. I'm Quarte, and I will be your host for today. I'm also an investment analyst at Nedgroup Investments. Of course, we are a top 5 asset manager, and we're also a leading operator in the corporate and institutional space in terms of money market funds, which are over 140 billion rand in liquid assets. Now, I'm sure by now we've all been accustomed to logging on to virtual events such as this. And yes, this is certainly different from the days when we used to have this particular event take place on the lush lawns of Summer Place in Johannesburg. But there have been some positives because now this has allowed us to significantly extend our reach. So over the next 4 days, we will have 4 1.5-hour sessions where we will have leading minds who will be sharing their unique insights on various topics such as, the economic and political landscape, the financial system, responsible investing, and behavioral finance, to name but a few. But at this point, I think it's a good time to bring in some familiar faces to the Treasurers Conference. With me joining us in studio, we have Ferguson. Of course, he is the head of distribution, and Sean Segar, who is the head of product at Cash Solutions. Gentlemen, thank you so much for joining us this morning. Ian, perhaps let me kick off with you because it's been a very interesting year. Looking back at 2020, there have been some interesting trends that have occurred. So just looking at the second quarter of last year, we saw quite a large inflow into the collective investment schemes. I think we had a net quarterly inflow of 88 billion rand, which was unprecedented during a time of heightened volatility, uncertain trading conditions. It was interesting to still see investors so confident about collective investment schemes.
Yeah, thanks, Tumi. And firstly, welcome to all our clients attending our Treasurers Conference. As Tumi said, it's our 10th year of running this. I think what's amazing is that this is a conference, yes, it's called the Treasurers Conference, but not necessarily treasurers need to attend. Anyone can attend this event. So it's fantastic to be here. And before I go to your question, I was reminiscing with Sean earlier about 10 years. 10 years we started the Michelangelo. We were 75 people that attended this event. This week we've got close to 1,500 people that have registered. So it bodes well for a great week. But on your question, it's been fantastic. The flows have been phenomenal. I think things will change. I don't think we expect these flows to continue because I think a lot of corporates, drew down on their balances and parked that in money market funds, as I'll explain a bit later. But I think it's and we'll see that sort of unwinding, I guess, for the remainder of the year. There's also been some change in the industry. One of our big players has pulled out the market. So I think that'll affect the market a bit as well going forward. And I think, it's our industry is well positioned. I think the proposition is what's actually key here. And that really takes me to that slide of our proposition. And I think what's important here to understand is that with Cash Solutions business, effectively what you're doing is you're consistently getting a better yield than a call account. So your call accounts are yielding roughly 3.25 to 3.5%, and the money market funds are yielding from sort of 4.2% upwards. If you look at the access to this, and this is, I think it's always it's too good to be true, but the fact is that you can have access to the funds every single day or tomorrow, depending on your cash flow needs, and that differential in yield obviously speaks for itself in being a nice pickup from a call account. We always think that the spread of investment in our portfolios is what's key. You think that roughly 98.5% of our deposits lie with the big 5 banks in South Africa. So very small exposure in the rest of the industry, be it corporate spreads or be it government spreads, although the government exposure has picked up significantly in the last year because they have paid up. I think also a point of the proposition is the low cost of running these funds. So the no transacting or entry fees within our portfolio. So running a portfolio like this is of extreme low cost. Our funds are very importantly rated. So a lot of corporates that use us have to have a rating, be it a AAA, a AA plus, or a AA rating. And I'll show you that in the next slide. All our funds are obviously regulated, which is absolutely key in this industry. And then I guess a simple way of transacting. So we have our cash team in the back office, be it Liz or Lou or Shannon, who are there to take your calls, make sure that your transaction goes through easily. So on the ratings, I mean, and these ratings obviously get upgraded or affirmed every single year. So our corporate money market fund has, which is Reg 28, has a AA plus rating together with a money market fund. Our core income fund, and purely on duration, and we'll chat about that, is a AA rating. And then our prime money market fund, which is the only AAA rated money market fund in South Africa, obviously invests in international banks. So that's the spread of offerings we have. I think then if you look at just what we touched on earlier and the rates, effectively what you're getting with a money market, you're getting a pickup of roughly 100 basis points on call. And as you can see, the yield curve is quite steep. So to get the equivalent of in a fixed deposit, you have to place your money for roughly a year to get the money market rate. So that's the proposition which we think is of paramount importance.
Ian, as you've said in the beginning, the inflows have been phenomenal. Are you able to just share with us some of your key industry statistics and perhaps how we've seen Nedgroup Investments able to increase or capture more of the market?
Sure. Jimmy, yeah, absolutely. So what we've seen in Q1 2021, and I guess this builds up from, I guess, call it 15 months of flows. We've seen the industry, when I say the industry, the money market, short-term fixed income industry, has increased its assets from under 600 billion to close to 700 billion rand. Now, as I mentioned, that was really much where we've seen corporates draw down on the facilities of banks, place it in these money market funds, and that has been a growing trend. Now, I think there's obviously, we think this number will change. We've seen, everyone knows that the 4 big players in the industry and ABSA have pulled out of the money market industry. So basically what's going to happen there, that was a big fund. So we should see that number drop off slightly, I reckon, towards the second and third quarter, as the corporate deposits have mostly left that fund, and the retail deposits will be leaving in the first week of July. So that should impact that. But I also think that, we've seen corporates hold back on their dividend payments. So we should see that start resuming, I think, from the second half of this year, although some have started already. So the flows have been significant. And we've captured a large part of that, which we're very grateful to you, our clients. And I guess, a lot of our clients have just, expanded their range with us, where they really had the money market fund. They've also opened our core income fund. So that's why that fund, sits around about 65 billion rand, with the money market funds, they sit around about 80 billion rand in total. So that's looking at the industry. If you then go to Nedgroup specifically and you say, well, where are we positioned? And this is obviously looking at retail as well as institutional flows. Nedgroup has about a 14% market share in the money market fund. That's the right-hand pie chart. And then in the core income range, or the short-term fixed interest, we've got about a 22% exposure. If you then look at where does Nedgroup position itself in the corporate market, and you can see that the industry is about 75%, and we're about 25% of that industry. So I think it's a good market share for us to have. I think in line with Nedbank's market share in the industry, it's aligned. And then what we also do, and we do this we've been doing this for probably 10 years, Sean. Corporate cash balances, have increased significantly, and Sean's done a lot of work on this. So, Sean, give us some insight into how that has changed.
Sure. Good morning and welcome, everybody. We have been tracking what is actually intuitive, but we've shown that there is an inverse relationship between business confidence and corporate cash balances. These are non-financial corporate cash balances that we source from the Reserve Bank, and these cash balances are at near record levels at the moment. So as you can see, with a bit of a lag, when there's a dip in confidence, the cash levels do increase. And the reason for this very high cash balance at the moment is because confidence is very low. So what the corporates have been doing is they've been withholding dividends, they've been destocking, they've been cutting costs, and they've been raising capital. So for many reasons, cash is at a very high level. We hope that confidence improves and the cash balances do decrease for the sake of South Africa. That is something that we must watch. But in the interim, it's very important that these very high cash levels do work as hard as they can, and money markets are a great solution for that, with interest rates very low, I think the corporates want to get as much out of it as they can. So we'll keep tracking this relationship. It's a very clear negative correlation, and we find it very interesting being in the cash space.
Yeah, well, we'll certainly be looking out for that. Either one of you can feel this, but as we all know, the old cliche, adapt or die. Yes, it is a cliche, but I also think that it speaks or it describes what is at stake for businesses. Are you able to maybe tell us a little bit about some of the initiatives that are currently happening within the business?
Yeah, so we've obviously things have changed a lot, as you point out. 18 months ago, we didn't have an automated solution for clients. And effectively what we've done is we've built online secure site transactability, which has been key for our clients. And we've moved about 60% of our clients to automation in terms of the form of withdrawals. So it's a great initiative the team has built. We previously used forms, and that's archaic, and we've moved from that. So all withdrawals can now take place through automation. And excitingly, that in the second half of the year, beginning in July, we'll be launching our deposit functionality, which we're hoping all our clients will move to as well, because I think it's good for everyone. A lot of people working from home, so automation is key. So online deposits will be available from July. What we've also done, we've thought about our industry, and we thought that a very good initiative, and it came from Sean, was to drive a LinkedIn Treasurers Forum, which we have set up. And it's really in the basis where we think that we were trying to be, we would be ahead of the game in terms of making sure that our clients can access information which is key to them about doing industry-related activities in terms of thought-provoking articles, which we're putting on our LinkedIn forum, and that's been run for the past 2 weeks. So we launched it last week, and everyone can subscribe to it, and hopefully there's some great articles to get from there. One thing we've also done, and we've done it, I think it'll be our 4th year, Sean. I think we've done our charity day, and we've normally done it at the end of a quarter. This year, we're changing it to the 29th of October, 2021. And really what that means, and we'll discuss it more tomorrow in David's session, but effectively what we've done is that we've taken all the fees that we've earned on our funds for that one day and then donated that to worthy charities of cause. And we've done about 10 charities per annum, and it's been greatly received, particularly in these times where money's tight and charities are not getting the flows they were getting from donors in the past. So look forward to the results on that, and we'll have a little video on that tomorrow. And then very important is one thing I always want to make sure that clients know, besides the domestic offering where we offer great solutions on short-term rates, we do have a US dollar money market and euro money market facility as well, which we offer through Nedbank as well as through BlackRock. So the Collect Investment Scheme is offered through BlackRock, but Nedbank have got a very good offering which they can run out of London for us. So yeah, that's pretty much the initiatives we've done. Jimmy, thanks. It's been great. Thank you for joining us, and I look forward to a good 4 days of sessions.
Okay.